Hey, good evening, everyone. Tim Reset here, bringing you the first Monday market analysis video for the year. Today is January 13, 2014. Coming to you a little bit later in the evening. I'm back out on Arizona time. I'll be out here for the next couple of months, getting some riding in. Got the office set up, and be able to enjoy some nice weather we're having as opposed to back home in the Midwest. But anyways, let's move into the ES and talk about where we're at here, where we're starting off the year, and walk through some trades that we had today, and talk about what we can expect moving forward in the week. So the first thing you'll notice is I drew up the 50% retracement from the low back in the middle of December to highs. And if I zoom in a little bit, we did have a double top just about here the last couple of days to start off the year, and so it's pretty clear that we're going to get get a pullback here back down to the ES 1800 level. And if I go over to if I flip over to profit charts, you can see that not only do we have a 50% retracement, we also have prior support, prior resistance that will act as support, and we also have the uptrend line, all converging right at this 1800 level on the ES. So that's going to be a pretty strong level to watch. That'll be a very strong inflection point, and there should be some strong support at that level. If we do get a push right through 1800, because it's a round number, the possibility of that would be greater as opposed to if it were 1805.25. Because it's 1800 and that's such a round number on the ES, if it does break and we have a lot of stop orders right underneath that, big institutional stop orders, we could see a massive sell-off below 1800. But in the meantime, looking for that 1800 level here on the ES to act as support. We do have the double top, and so as we start to pull back, we'll look for the volume on the both intraday as well as the daily chart. If we look at the SPY, we can kind of look at the volume and see, okay, these last couple of days, the selling volume has been quite a bit heavier. At the end of the year, the volume can be a little bit misleading because it declines kind of that week between Christmas and New Year's. There's not a whole lot of trading activity, and then as we start the new year, people and the big traders start to kind of ease in slowly. We'll be keeping an eye on the daily volume across the broader market. So here we have the S&P. If we take a look at the DIA, the Spider Dow, we can see some heavier volume on the selling side. Again, support below us. If we go to the NASDAQ, same kind of trend. We have some increased volume on the selling days, as well as IWM, the Russell. And same thing, the down days have seen some increased volume. So there is great potential for a little bit of a push lower. And if I go back to the ES, looking for that 1800 level to kind of act as some temporary support. And if we go to the intraday chart, we can take a look at a couple of trades from today. Now, going into tomorrow, before I start going backwards, we have an extension drawn from lows of the early morning today to lows of the afternoon. And so tomorrow, and going into the evening or the overnight session here, we'll be looking for some resistance at 1820, and that level to take us lower down into the 1805 and ideally into that 1800 level. So looking for a push lower as we head into the remainder of the week. If we kind of take a step backwards and I flip to a tick chart, I'm going to remove the drawing that we had. If we draw the retracement from the morning, from lows of early in the morning to highs at the time, which was just after the market opened. We had a pullback at 8:45, and then we kind of touched double bottomed and touched that again right before 9 o'clock. And once that retracement made its way up to the negative 23% retracement, we went from the 50 to the negative 23. Then I'll go ahead and draw the next move in the series. And I don't like to trade in the central time, rather. That'd be 8:30 to 9 o'clock, kind of that first half hour of the cash session on the NYSE. So looking for the next trade in the series, drawing from the entry to highs, gave us the next retracement at 1835, and then we just round up to the nearest tick. And you can round up and add a tick if you want. In this case, 1835.50s was plenty, and then that took us up to the negative 23% target again at 1835. And when I'm looking at a target, you can round down and add a tick if you want. So 1838.25, giving you the move there. Once we completed that move, we can go ahead and draw the next move. And at this time, it was getting a little bit later in the morning. So I tend to be a little bit more cautious going into the lunch session. We traded at 1836, got a small bounce, and then started our decline. And so at that point, you have two options. I'm going to go ahead and remove the prior trade. The first thing you can do is draw all the way halfway back. So we'll pull from lows to highs. And then the next thing you can do to get us into all the way halfway back is take the first setup in the opposing direction. So draw from highs, and in this case, the halfway back long traded first. So 1834 is traded first, but if we had traded a short before that, you could take that short down into all the way halfway back long. So what happened here is we had the bounce at 1834s, and whichever setup trades first is the setup that I'm going to take. So we had the 1834 right after the 10 o'clock hour, and that took us up into the opposing short, which we then held and then traded lower and then broke the long, and taking us lower into the afternoon. So because the long traded first, that ends up being the valid move. And like obviously you can see, we had a small bounce, an opportunity to tighten your stop. We had a small little rally, but then we reversed at the opposing. So when you have a couple different setups like this, where we have the all the way halfway back long and then all the way halfway back short, you can be a little bit more aggressive with your stops and trail them a little bit tighter. You can take the position off at the opposing, or take half off at the opposing, just to kind of manage a situation where we're stuck between a 50% long and a 50% short. And then once we broke, there really wasn't an opportunity here on the ES to get into a retracement. The next retracement didn't quite make it up into its 50, and we sold off pretty quickly after that. But if I go over to the YM, I can show you using the other method, the breakout method, an opportunity to get into the trend when something like this happens, where we get a failure of a halfway back, and then we start to sell off really quickly. So I'm going to go over to the Dow. I'm going to change it to a 5-minute chart and turn off the Heikin-Ashi. And I'm just going to go to trading hours only, just to remove some of the clutter. So if we take a look at the Dow, and this is the you can kind of see, if I draw up the halfway back short, this was essentially the short on the ES. So if I remove some of these lines here, this short right around 10:30 corresponds with the Dow right here. This is about 10:30. So what we want to do with the breakout method and using a 3, 4, or 5 minute chart is to identify the lower highs or the lower lows in this case, because we're starting to make a downtrend. But the main thing that we want to do here is identify the trend and then look to get in a trade with the trend on a break of the highest bar in a pullback. So the high, if we go back to 925 rather, the high of the day, then we subsequently put in a low, and then the next block here is a lower high because this low is lower than the previous high. We then made a lower low because the 11 o'clock is lower than the 1020 bar. And then we put in another lower high, and it's at this point the second lower high or the second lower low the second lower high or the second higher low that we have complete confirmation, if you will, because this is the first low and this is the first high. So those are kind of the anchor points, if you will. And then this is the first lower high. And at this point, when we make a lower low signifies the downtrend. So right here, all we have is just a double bottom at this point. But now that we have a lower low, we've signaled a downtrend, and the entry bar is a break below the low of the high bar in the pullback. So we pulled back, we had a small bounce, and entering below the low of this bar allows you to get into the trade with the trend at a very low risk opportunity. You can put a stop above the high in this case because we're getting short. So just putting an entry one tick below the low at 16,343 rather. And then you can just trail your stop above the high of each 5-minute bar as we start to move lower. And then it's not until here at 12:05 that we break the high of the low bar, and that gets you out of the trade for a substantial move. And these breakout setups work really well when we don't make full retracements. So when we can't get in at a 50%, or we don't make that full retracement, using the breakout method allows you to get into the trend when things start, or just before things start moving quickly. So having those two in your arsenal make it for a good balance for different types of days, different types of trading situations. And then if we, a couple other things I want to talk about. If we look at gold, actually before we take a look at gold, when we're looking for, so that those two methods were kind of broken down from or derived rather from the swing trading method that I had began trading with and that I still use to this day. And with all of these methods, the approach is to kind of go from the top down, start with the broader market, and then narrow into your market so we understand what's happening in the broader market, and then we can base what's going on in our market relative to the broader S&P. So is my market relatively strong? Is it relatively weak? Is it relatively more volatile? Is the range not as volatile as the S&P? So we have kind of a barometer. So going into 2014, I'm starting to put together my watch list and compiling my stocks based on just doing a screen for 52-week highs and stocks making 52-week lows. And then after a week or so, once I've got a few names on the list and given some time to pull back, then I'll look for stocks that had made a 52-week high and pulled back. And in this case, because the broader market is starting to pull back, those stocks that made 52-week highs back here at the beginning of the month and at the end of last year, those are the stocks that I'm looking to enter long as we make our pullback to support. So as the broader market moves down, I'm looking for long setups to enter. And if you turn that over on its head, as the broader market is moving up, I will be looking for stocks that were making 52-week lows that are just being lifted up with the rest of the market. And I'll look at getting into those on the short side when the market is lifting or making new highs. So I'm looking to get into my longs when the market is pulling back, and I'm looking to get into my shorts when the market is rallying. That way you're always getting into stocks, getting into strong stocks when the market is weak, and getting into weak stocks when the market is strong. Kind of counterintuitive from what our our biases might tell us, but in looking at things that way, and then you can use that same frame of mind to narrow in on the day trading markets and things like that. You're kind of always one step ahead of the game, rather if you think of it like a chess match. And so if we look at gold, gold has not really been in the media very much. I've been talking about it here and there, and the main reason I brought it up was because of the double bottom that we made here back at the 115 price level. If I pull out even larger to a 5-year, you can see we made a giant halfway back, and we're sitting within the 50% in the 61.8. We took a stab at gold back when we made this first low and started to rally out of the lows, and had some nice trades and a lot of opportunities in here. And I think we're getting that same opportunity again. If you can see, we have a double bottom here that also lines up with the bottom that we put in 6 months or so ago, and then we've made a so we have the double bottom, we have a higher high, and then we have a higher low. So this higher low signifies that we are now in an uptrend in gold, in the shorter, more immediate term. So we'll be looking for a break of the next or the prior swing high and start to take out some of these swing highs as we move higher. So I think there will be some opportunities in gold in 2014, as well as a lot of stocks that across the board from a lot of different sectors, as some new names start to pop up, and some of the bigger names start to change their trend. If we look at Apple real quick, you can see that not a whole lot going on in terms of a very clean and defined uptrend. And so I think some of these bigger names, as they become part of the broader market, as Apple has been integrated into the S&P and things like that, they do have a big weight on the broader market, and I think there will be some bigger trading opportunities in some of these bigger names: Apple, Amazon, Netflix, and stocks of the like. So that's what going forward here in 2014, we'll be talking about swing trading. We'll be talking about day trading, breakout method, the 50% retracement. Talk about the ES, the Dow a little bit. The euro, some soybeans, so a whole host of things in terms of trading, and I'll try to throw in some other interesting tidbits that I come across in regards to trading, investing, and kind of living a financially free lifestyle. So with that, I hope you all have a great week. Oh, the one last thing I wanted to mention is if you're watching this on Monday or Tuesday of this week, I'll be doing a webinar with the Stage 5 trading tomorrow afternoon. I'll put the link underneath the video here in the member dashboard. And my broker over at Infinity, Anthony Giacomin, has moved over to Stage 5 to help start his own brokerage firm. And I'll just be doing kind of an introductory webinar with the guys over there, and just talking about trading, my methodology, and kind of a little background of my trading. So if you can make it, I'll put the link in the member dashboard. With that, I hope you all have a great week, and we'll talk to you again soon.